US stock markets tumbled yesterday as traders returned from their holidays ahead of the release of the US employment report for August on Friday. Market worries for growth, not only in China but the US as well, tended to intensify, while NVIDIA fell more than 9%, dragging US stock markets lower as a whole and souring the market mood even further. In the European markets, we note that Volkswagen's considerations to close down factories in Germany for the first time caused a public outcry. We are also going to have a look at Apple's It's Glow Time event and, for a rounder view, conclude the report with a technical analysis of Dow Jones daily chart. We highlight on Friday the release of the US employment report for August, which is expected to have a ripple effects beyond the FX market, also on US stock markets. A possible tightening of the US employment market could also allow the Fed to ease its dovish intentions to start cutting rates in the coming months. Should the Fed be encouraged by a tighter US employment market to cut rates to a lesser extent, we may see the market being forced to reposition itself, in turn weighing on US stock markets. On the flip side, should the rates and figures show that July's slack in the US employment market remained or has even widened in August, we may see US stock markets getting substantial support. Maybe the most characteristic bearish move yesterday was the drop of NVIDIA's share price. It should be noted that the company got a subpoena from the US Department of Justice as part of an antitrust probe regarding the company's practices. Should the probe deepen further or even create negative repercussions for the chip maker, we may see an adverse effect on NVIDIA's share price. Yet we see the drop of NVIDIA's share price as an expression of the doubts and second thoughts of market participants for the prospects of an artificial intelligence in general and NVIDIA specifically. The revelation that Volkswagen is considering closing plants in Germany for the first time in its 83-year history caused a public outcry for the company. Analysts mentioned the possibility that Volkswagen may close down factories in Dresden and Osnabrück. The company is facing intense competition, especially in China, where BYD's electric vehicles seems to dominate the market. Should we see market worries for the outlook of the company intensifying, we may see it having a bearish effect on its share price, yet the issue could also have a wider bearish implications for German stock markets. The sell-off in US equities markets has also affected Apple's share price yesterday. Please note that the company is to have the 2024 Apple It's Glow Time event on the 9th of September, when the company is expected to debut the first generative AI iPhone. In the event, we expect an enhancement of Apple Intelligence and Siri, possibly available across the new iPhone line. Overall, shall we see the event exciting tech experts and consumers, we may see a bullish effect on Apple's share price and vice versa. Dow Jones tumbled yesterday, breaking the 41,435 support line, now turned to resistance and continue lower, testing the 40,800 support level. Given that the downwards motion of the index clearly broke the upwards trend line guiding it since the 8th of August, we switch our bullish outlook in favor of a sideways motion bias initially. Also, the RSI indicator dropped from the highs of almost 70 to just above the reading of 50, implying that the bullish sentiment of the market eased, if not has faded away. Yet the drop of the RSI also implies that the bearish sentiment has yet to be built up. For a bearish outlook, we would require the index's price action to break clearly the 40,800 support line and start aiming for the 40,050 support base. Even lower, we note the 39,300 support barrier. Should the bulls regain control over the index, we may see it breaking the 41,435 resistance line and set as the next possible target for the bulls the 42,200 resistance level. Thank you for tuning in to our financial news. From all of us here at IronFX, we wish you a solid